Papa. I should tell you that one. Now, what on about me, dear, with you more. Can we go? Are we down here? Is everybody down here? So let's prepare. I think probably the last account, in my opinion, though there are other adjustments we could do, but PPE, non-current assets. Help me out because there are a lot of animals that we need to bring into that kingdom so that we can have a good zoo there. Give me my preamble. Bam. Help me out with PPE. What do we have there? Opening balance.
7520.
Okay, so balance brought forward. 7520. Balance carry forward. 11,720. I remember there was a lease asset, isn't it?
Yeah.
So we bring it. Then there was also a disposal, that's correct. How much was it? 720. Then I smelled depreciation somewhere. Did you smell that somewhere? How much was it? 1,200. So because of that, I got to bring that one also here. 1,200. We are adding back, isn't it? Right. What else do I have to bring? The exchange gain. Now, there, that statement. I think I didn't even read it for you guys. Since you didn't read it, let me read it for you. Listen, it says that the exchange gain relates to translation of an 80% owned overseas subsidiary under the closing rate method. It's the other hand now again, and this is a non-cash item.
Which one?
Everything here, page 4. Have you seen it? No? Yeah? Oh, there's question 2 already. Yeah. You see that? So it says that the exchange gain relates to all those guys. Now, I can see an exchange gain in relation to a non-current asset of 242. So what do? I need to bring it here. Why do we bring it here? Because this exchange gain was added to the opening balance, which gave us this one, closing balance. So if it was an exchange loss, I would have subtracted it. And that is 424. What else? Yeah? Uh-huh.
We added the 240 to the 960.
Which 240 to which 960?
What about the 1,000 to?
Yeah, you were doing something opposite. Where is that figure?
I use only 960.
Yeah. If we lease an asset in a finance lease, don't we charge depreciation?
Yeah.
You forgot about that.
Come here.
If we bought an asset and it's a finance lease, don't we charge depreciation?
Yeah.
Yeah. So why would you bring only the 960? Elvis and the natural. Right? That's why we are bringing the 1,000 too.
Pressure, you couldn't take.
Yes.
The exchange gain is a non-cash item.
Yeah.
We deduct it.
No. Why would you deduct it here?
I was thinking that all the non-cash items.
It's a non-cash item and it relates to an asset. So we add it back because they for accounting purposes, they added it. So we also have to add.
But we won't add it.
Nothing, because the difference between this account is what we will bring here.
So
meaning it has been completed into it.
it's what we put at the investing activity.
Activity as an acquisition or further disposal.
Okay. But if it was an exchange gain relating to something else, that one maybe we could have.
Something else like what?
Say shares.
Say shares. Exchange gain on shares. Okay, that's a good question. That means when we are preparing the share capital, and this schedule they did here, the exchange gain effect will be added in relation to the shares. Are you getting the idea? Then in that case, we wouldn't have picked this figure. We would have picked the gain in relation to the shares from it and picked that figure.
So still won't come here.
Which one? No, it will come. But then the difference is what will come. Are you getting the idea? The difference between the closing or this figure here and the gain in relation to the shares, we subtract it. Because that gain is a non-cash item. So we subtract it. You get the idea? Don't try to think too much.
Come again on this, the exchange rate gain related to the translation of.
Let me just stick to this question.
You don't understand what? Elvis, I'm coming. She was asking, what about exchange gain in relation to shares? And I'm saying that if a share gain and exchange gain, what does that mean? Or if a shares has an exchange gain, share capital keep a credit balance. So that opening balance will come. That gain will be added to it, just like how we are adding this gain to this asset.
Yes,
so that you get a closing balance, then when you subtract the difference is what you are bringing.
Because the gain is non-cash item.
Yes.
You have to subtract it from the proceeds.
So let's just rely on this
Hey,
particular
hey,
question.
don't do that. No, so what I'm saying here about the gain is that
We get similar one like this and even when they were up
Stop,
proud, we
stop.
got 14 class.
In 5 minutes, I'm done and people will be asking what's up.
share. I said 5 minutes to operation. Do you know that if you see something similar in the exam hall, that could even make you feel?
Yes.
I did
If
in
you
the
are not careful, you'll be confused.
I did in the FR.
And that could make you feel. Because it can happen like you see Nhyira solved this question in class, bam, and it's there last semester. Financial reports. And you're like, it's there. Like it's there. You did it in class. I mean, what's up? What was it? Until a honor white people say, what did Nhyira say?
You will not like think of how this
How you should solve it. So that's dangerous. It's not something I pray for. Okay? It's not something I pray. See? Okay, so Elvis, what we say here is that gain on the translation, okay, part of it relates to the non-current assets, okay, 424. So that one has to be added, okay, to the opening balance of the non-current assets because it was added before getting this closing balance. That's why that particular amount has to be added back. You get it? You get a treatment? Or you don't get it still?
Okay, so he has given us the breakdown.
He is giving you the breakdown. So we're going to pick them separately. Are you getting the idea? So when we pick the non-current asset, we will add it to the opening. When we pick the receive inventory, we will add it to the opening. When we pick the receivables, we add it to the opening. When we pick the payables, we add it to the opening. Ebazinti, because they are all gains. If they were losses, we would have done the opposite. It is the losses are. Then the adrenal compass no to the opposite side and you can get it.
So why did you write these are exchange losses? But you said we add them to the inventory.
These are exchange what?
Gains. I mean the inventory, add to inventory.
You add it to the opening balance of the inventory.
That's what I
Yeah. You did what?
They are all gains, so you add it to all the opening balance, right?
Yes.
That's what he did.
Yes.
I'll come back. Some of the account has credit balance, so you are rather this.
I'm looking at keeping the inventory, receivable, cash, the trade,
The movement in the working capital. Okay, I'll come there, don't worry. Can I have the balancing figure, please? Help me out. Beside this figure, fastest hand. 5 minutes, people. Who want to use 5 minutes to do cash flow? Hey, Charlie, 5 minutes for cash flow. And so, what's Shakira?
If you have choose your point, Baba.
You can't finish it 12 minutes.
These ladies, when you are
They do one of those things.
behind or beside them in the exams room,
They can torment you.
they have some speed there.
13, 6, 14.
Ladies can choose all these things that we've done. Somebody can choose in the end.
What's the balancing figure? Which side is bigger?
The credit side.
You sure? So the debit side. That will be acquisition, isn't it?
Also, it's 4996.
So this 4996 come under investing activities, and that will be treated as what? Acquisition of NCA. Workings, what's my workings number?
Working 4.
Okay. 4996. So that's it.
The only thing where the exchange.
Who makes this up?
What?
Who makes up this account?
I did not bring the exchange things.
You didn't bring the exchange gain. What did you do?
Yes, I also didn't bring the exchange in.
That was the only thing?
The decision.
Wow. Nanaja, what did you do?
Then why I can't say. I brought the proceeds.
You brought the proceeds.
I brought everything but the proceeds. I added it.
What did you do? What did you do? Okay, don't worry.
Worry about what you do.
I'll blow your stomach. Can't even see. Alright, so that is it about that.
I brought this in the 2424. I did it
Without knowing.
I wanted to.
Oh, shucks, no. I'm going to abandon some when buy. Pressure, no. But you didn't bring. What did you bring? The disposal or depreciation?
No, only the decision.
That you didn't bring. So unconsciously you brought it. Unconsciously. Okay, it was conscious because was it conscious or unconscious? You don't even know.
Conscious or unconscious?
Questions correctly unconscious. Oh God.
Alright, so that is it about that. Now are we done? Let's check the movement. Please put out this and let's do the movement in the working capital quickly.
One day, you'll get there.
You get it right so you can tell your story.
It has to be this year.
But we are there.
I just wanted to be off my head.
We are there. Of course.
Like Nhyira said, we need to.
You need, not a want. You can say, yeah, I want to end ICE this year. I want to make it over. But if you tell I need to, then you can work extra hard. That's it.
I must do those fast.
That's it. Because sometimes the pressure I have to put myself through at some stages to make certain decisions, it's not fair, but gotta do it. That's it. That's it. Is there anything you are smelling? No?
And the investment, you said as well.
Yeah. We have not brought that one as well, right? So it's part of this one. So investments. That will be acquisition, I guess. Because it will be 1,200 minus what?
No, it's 27. No, wait.
What was the investment in the balance sheet?
It was 2,700 brought forward, and then the closing was 3,000.
So the difference is 300.
You didn't mark that one.
That is it an acquisition? Yes, it's an acquisition.
We got it already.
We brought it already.
The first thing.
I didn't
See this girl.
Double count.
Double counting.
Double tally.
Sure, mark me wrong.
Am I wrong for that one too? Oh, alright. Did you bring it on the schedule of the cash flow?
I wanted to down to wrong.
Ow.
Really?
Ow.
Let me see.
Oh, no, it's okay.
Well, at least you could have had that. So you could have had a tick for this, tick for that, tick for that, tick. So 4 ticks.
Yeah, but
All this will give you about one chance.
it was nice.
1 mark.
1 mark, yeah. Go close to 1 mark.
Pass you.
Okay, so let's go. Movement. Inventories. Let me put inventories here. Receivables. Trade payables. I think these are the only 3 things, right? So let's go for it. So what's the opening balance? Inventory, opening balance.
We are coming.
Come.
5,740.
5,740. Receivables.
438.
Payables.
1,760.
Okay. Let's go.
That is that's up. The game.
No, the gain. How much? 117.
339.
339.
58.
5.8. Now this 5.8 here, it's a negative, right? Okay, so trade payables, we're going for that. Closing.
So why I'm not subtracting it? The negative one.
No, it's payable.
Payable.
Payables are negative. Like,
Yes, it's a payable. It has a credit balance.
Wait. I don't get the game straight.
check it again. Check where it is. Check where the 48 is.
Yes. It has a payable. It has a credit balance, but the thing is a loss.
What is a loss?
It's not a sin loss.
It's a gain.
I can check again.
The extent is not a gain.
Why they put in brackets?
No, because it's payables. And payables has to be in brackets, nigga. Saying payables is payables. Don't you see that they are actually preparing an asset account? Sorry, a cash generating unit. So don't you see the assets are added and the liability is subtracted? Are you okay? Derek, are you okay now? Are you okay now? Kind of. No. Payables, and there is a gain on payables. It doesn't matter whether it's in bracket here. In bracket here is signifying that it's payables. Don't you see this is a net asset?
Okay, I thought they could have just once it's gain.
No, they couldn't have done that. Otherwise, you wouldn't have had the 875. You get the idea? No, understand it. It's payable, so has to be subtracted.
The way you were mixed, this is not how I do it.
Okay, you can go any way you want to go. You added this to this, isn't it?
Yeah.
And you subtracted this from. That's the same thing I'm about doing. Now, give me your answers for these guys.
5857. 4719. 1818.
Then closing balances.
6135. 5720. 1420.
Give me the balancing figure.
1420. 278.
27. Now look at something. The closing balance is greater than this balance. So what do you smell? Increase, isn't it? Increase means what do you do? So increase in inventory workings 5. How much? 278. Increase means we subtract, I guess, because it means more inventories are being purchased. Receivables, what is happening? It's also increasing by 339, meaning we are selling more to the people and they are not paying us. So another cash outflow 339. Do you put these things in brackets? Trade payables, what's happening?
Are you sure it's 329?
398.
No, it's 1001.
1001.
On baby cry of that.
Insurance receivables is supposed to be in bracket.
Increase in receivables.
They are
Buying more, they are not giving us money. That's why I was asking you, did you put them in brackets? No.
The first one I put it in
But
bracket.
the second,
The
no.
second one, what you are saying?
So I don't get it.
Hey, relax. Is inventory and trade receivables not treated the same way? If your inventory is increasing, okay, if your trade receivables is falling, it means they are giving you money.
Yes.
If it is increasing, that means you are losing what? Money. You are selling, you are taking money.
Subtracted from the working by this account.
So you are wrong. Because if you bring it here and it's not in brackets, you are wrong. That's why I mark you wrong, maybe. Okay, payables, what's happening? It's falling, I guess.
Yes.
By?
It's falling by 398.
So that thing sound.
Oh, no, I'm coming. What's the difference here?
398.
398. It's negative, isn't it?
Yeah.
So decrease in trade payables means what? We are paying. Isn't it?
So it's negative.
Nanajua, your debtors, if their figure increase, what does it mean? They are buying more. If it reduces, it means they are out paying you. In this case, what is happening? It is increasing. That means they are buying more. They are not giving you money. Sounds good? Now remember what I said? I said the tax should come somewhere. What was tax paid? Please, can you give me that? I was working. How much was it? 117. Is that all? Have we brought everything? I think we are done with the cash flow 20 marks. We are taking it straight up.
2 marks.
2 marks. Okay, so mark yourself out.
Let's look at this statement here.
Okay.
Under footnote 3, taxation on profit on ordinary activities.
Yeah.
They don't take into consideration tax on income at 30%.
We took the 800. That was what Yah was asking. That why didn't you take the break? And I said we are not interested in the break. All we are interested in is how much tax was charged for the year. The examiner is only giving us the breakdown.
So you intentionally brought the breakdown for
Okay. So the 800 was what was reported
in the income statement. So he is telling you what amounts to that.
Okay. Taxation on profit on ordinary activities.
So in actual sense, when you bring the opening and the closing for the note,
It's not something you're not going to do movement. It's only balancing. Why do they bring it? Because they want to see if you understand what you did. Or you understood what you did in class. That's what we want to find out. So minimum solve me one side question. Now mock na me the another side about. Now I mean say that means that you didn't understand the thing. I just want you to know that there are different shades of the question.
what other form can they
I know, right? Give us all the form.
And we can't finish with all the forms.
Oh,
You know?
Lord have mercy.
You feel like drinking, crying. No, you don't have to cry.
When you gave me the question, the legend.
No, you don't have to cry. Don't kill yourself.
So you say you're going to give drink?
I'll give drink. I
I
want to even pinch you. I want to even pinch you. Are we done? I think we are done, isn't it? Please help me out. Let's see if our cash flow balance. Help me out. Arithmetically. Now I need confirmation too, so that. So we're gonna have net, whatever. We're gonna have net. I don't know what is gonna happen. We're gonna have net. We're gonna have net also here. Something like that.
1930.
Which one?
Operating activities.
109.
1930.
Final answer?
Yes.
1930. Is that what I'm supposed to get? No, sir.
What did you get?
Let me see what I'm supposed to get. Okay. Sorry, I was on the wrong side. 1930. That's correct. So this is positive, isn't it? So it's called net increase. Okay. Sorry. Net cash flow from what? Operating. Give me this.
4841.
4841. Is that what I'm supposed to get? What is that?
When you go in the counter and you sit down for 2 minutes and
106.
go and drink water.
It's 10.
So all this breakdown, if they had not brought them, why?
I would have been able to do it.
Because taxation of profit in essence we read and become confused. Why have they brought this in there?
Profit and everything.
So I mean, when I look at the thing and I can't make me, then I don't know. Because
You just like cut your right hand and the measure.
let's the last one. Advance FM. Okay, that's the end. Come on. This is the car.
What did we get under the lease payment from the workings? What did you get?
355.
Okay, so what's my total answer? This one? So net cash.
The last one is 3.04.
Investing. Last one is
3.304.
that's net cash flow. From what? Financing.
So that if they had brought depreciation on the disposal, is it possible?
Yeah. If they had brought depreciation on the disposal, then they would have brought us accumulated depreciation accounts. Year start, year end. So then they wouldn't have given us the depreciation charge for the year. So that you prepare accumulated depreciation accounts, then you will now calculate the depreciation charge for the year.
That was what I was confused because they dispose of the assets before the year ended.
Okay, you know, even this one, you don't even know when. Did they put the date in? They just said during the year. So you don't even know.
So we don't know
it
when.
happens. Yes. But yeah, I mean,
10,075.
10,000.
75.
Hey, these figures are scaring me up. Gotta be careful. 1930 got it. 484. And this one also. Some figures are messing up here. Okay, let me make sure I got everything. Remember in dividend? Yeah. But dividend, raw proceeds from the issue of shares. Did we bring loan? Yeah. 75. Okay. What else? What else? What else? What else? Gotta make sure. Okay. Finance cost. 25. We had one. Where did we take this figure from?
Lease obligation.
Lease obligation account as 355. Let me see that workings.
820.
Is it balance?
That's balance. Yes. And 15 marks per plan.
So there you go with the cash flow statement. There were a lot of easy marks you could have picked. Easy marks. Easy marks. At least you could have picked this guy, this guy, this guy, this guy, this guy, this guy. Because you didn't have to think about them. Then you could have picked this guy easily up. Yeah, this guy was a bit complex. You could have picked this guy up. Yeah, this guy was a bit narrow. You could have picked this guy up, because they were easily there. And so look at it. Look at it. At least 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 by 0.5. 7. And we didn't do any workings. So, you know, up to this point, all these guys, we didn't do any workings because you were just doing the arithmetic and putting the figure down. Then those workings will bring you in, but certainly you're going to get more than that. So that's the cash flow statement, 20 marks.
You didn't have the additions.
Didn't mark. Yeah, I didn't even look at the total because
mark the total.
Okay.
yeah, the total will be marked.
You were saying that.
Yeah, I am just saying the easy marks that we could easily pick. No, the total they will mark. It's part of the ticks that is going to be awarded. But I'm looking at the easy marks that we could have had without thinking. Without thinking.